All right, what is up, and welcome back to How to Invest in Commercial Real Estate.
What up?
What up?
There we go, Brian. A little behind. We're getting there.
Yep.
All right, interesting topic today. Something we do very often. We've done a lot of recently. It's kind of the biggest measure of change we can affect as an asset manager is the lease renewals. So we're going to dive deep into lease renewals and just how we handle them from start to beginning.
Do we have any updates real quick?
Yes. We just launched a deal in Oklahoma City. We are going to be closing that at the end of the month. If you got in, awesome. Thank you. It was open for like 5-6 hours. It
went fast.
Yeah, it did go fairly fast, but excited about that deal. We've had it in contract since October. Long lead time on that one, but we think we got all the kinks worked out. Closing on it with Mabry Bank. Another one with Mabry. Super excited about that.
So when are we launching the next two deals?
This week.
Okay, this coming week.
Yep.
Another two deals. We didn't get into Oklahoma City. It's actually Shawnee.
It's actually Shawnee.
We got a nice deal in Cincinnati, a really nice deal in Richmond, Virginia. So make sure you keep your eyes out for those.
Yeah, I've been trying to fly out to Virginia for weeks.
Yeah, we were supposed to go again tomorrow, and because of weather, we're going to cancel the second time.
Yeah, that's great.
But Andy already made it out.
Andy did, toured the property with the property manager, leasing team. He said it showed really nice, so I'm excited to get out there and see it. But anyway, let's dive into the topic, lease renewals. So if you own a commercial building, you're most likely leasing that to somebody. I mean, even a rental house, right? You have a lease renewal that you have to do once a year. That's your opportunity to increase the value of your property by increasing the revenue or your NOI as much as you can, whether that's an increase in rental rate, capturing more triple nets if it's a bad lease and you're not capturing all of those. Got some slippage there. So it's really your slim. It's a slim window, right, guys? Because you're talking about 3, 5, 10-year leases. I mean, on new developments, they can be 15, 20 years. So there's not a lot of opportunities you have to renegotiate the rules, so to speak.
Yeah, and we're going to be focusing on multi-tenant retail. Obviously, apartments and single-family homes, you have to do this as well. But it's just a different ballgame. They're based typically on a month-to-month. I mean, they're a year lease, but the rate is a monthly rate, and you're trying to inch that up as you go. But there's no long-term leases to consider. There's no option periods to consider typically, and so we're going to be focusing on multi-tenant shopping centers today because that's kind of the bread and butter of what we're doing right now.
Yeah. So let's just say we have a 20,000 square foot, 30. It really doesn't matter. We have a multi-tenant shopping center, right? And one of our tenants is coming up for renewal or their lease is expiring at the end of the year.
Okay.
It's February. What are we doing?
It's February, and you're saying it's 10 months out.
It's 10 months out.
I'm not doing anything.
You're not doing anything.
No.
Yeah, I think most people are worried at this point. They're like, oh my gosh, my tenant's expiring at the end of this year.
So why do you say you're not doing anything?
Well, you really don't need to focus on that tenant. There's too much that can happen between now and the end of the year, and you don't have all the information you need to make a good decision on that tenant.
In terms of how their business does.
How the market's doing, what interest rates are doing.
General economy, I suppose.
Yeah, inflation. Let's say I have several vacancies in that center right now.
Sounds like a shitty center.
Yeah, well, let's just say that there is. I'm going to be in a weaker position to negotiate that lease that's 10 months away if I have a bunch of vacancy because I don't want another vacancy.
Yeah.
And so...
And they're going to know you have a lot of vacancies.
They are.
Right?
And so if I can get several of those filled in the coming months, then come around September, October, we're 2 or 3 months away from the renewal and I'm 100% full. Well, now I can be more aggressive in my approach to that tenant and their renewal than I would have otherwise. So I don't really recommend getting too involved in lease renewals until about 3-4 months out.
3-4 months out.
Yeah.
Outside of that, you're maybe just checking in on the pulse of the business, maybe asking the property manager, or if you have a contact there, asking them how business is doing, just surface level, hey, how's everything doing? Oh, great. Sweet.
What about this? What if the tenant knows that you're not in good position? There's a lot of vacancies, so they feel like it's to their advantage to reach out 10 months in advance. They know that they want a new lease. What are you going to delay them, or what do you think you're going to do?
I would delay.
Okay.
Yeah, that would be my opinion, is to try to delay, because the thing is, giving the tenant too much information too soon also gives them more options. So think about if the tenant comes to me and they say, hey, I want to renew. And I say, great, I want an increase. What if he's savvy, she's savvy, they're going to say, hey, that's too much. I think we're going to look for other space. Well, now I'm like thinking, okay, what if they find better space? What if they find cheaper space? They have plenty of time to move out. And so it puts pressure on me there. And so I don't want to be under pressure. And so I'm going to try to delay that discussion down the road to give the tenant fewer options.
Yeah. So what do we get? 90 days out, 120 days out, 3-4 months before the lease expires. We're reaching out to start the discussions. What do those discussions sound like? What's first contact sound like? How is it going through?
I'll tell you how I do it, because I do a bunch of these. I want to get the tenant to tell me what they want to do first. So it's kind of like whoever speaks first loses kind of thing. And so if I call the tenant up, hey, I see you got a renewal coming up in 2 months, 3 months.
First of all, you're leading them right there. I see you have a renewal coming up, instead of I see your lease is expiring. That sounds like something's ending. Versus, hey, I see you have a renewal coming up. It sounds like, oh, I do have a renewal coming up.
And so I want to get them to try to express, and in that moment that I mentioned that renewal, what kind of reaction do I get? Yeah, we're not renewing. Don't worry about it. Okay.
Seen plenty of those. Yeah, it's typically a knee-jerk reaction. If they know, they know. They're letting you know. No harm, no foul.
And that's not a bad thing for me.
Yeah, right.
Necessarily, because I'd rather know right up front, and that gives me time to start marketing that space.
Yeah.
But what I want to hear is, hey, yeah, we really want to renew. We definitely want to renew. It's going great.
They know everything's going good, and so now you have a little advantage.
I got a little advantage. Like they're at the space, they like the space. Their business obviously is doing well. I can get an increase in the rent, and that's all that we want as business owners. We have to increase that rent because that's what increases the value.
It's so funny. I'm just imagining all of our tenants calling us saying, like, hey, how's business? Oh, it sucks, Braden.
Hopefully none of them.
It's a game, and I they may try to do that, but they better be really good at playing that game, because I'm really good at it as well. So if they think it's just going to be a short conversation, I'm not going to let them off the hook. I'm going to call their bluff.
Okay.
Okay, real quick. Back to the timing, though. You said 90, 120 days. What if there's ever a situation where you've got someone, their business is really good. They've had a 10-year lease. Their lease is really low. And you kind of and they already have an option. Yeah. Is there ever a time when you might say, "Hey, I want them to miss this option because man, these guys are low. Their option is really low." Is there ever a time where you might just play it?
If you said that, it kind of makes you a piece of shit. So I wouldn't say that out loud, but I would just not say anything. I don't know if I would say anything to the tenant either, right? Because they have a copy of the lease. They should know they have an option period, just like I should know. Yeah. It's not like I have this crap in my calendar and date. Yeah. We have hundreds of tenants. I don't know every tenant that has an option. Typically, we don't even know until the year of. We're looking up maybe, okay, when does their lease expire? Do they have an option? So it's kind of information we're all trying to gather at the same time. Sometimes there's an option that's missed. Sometimes there's an option that's argued over. I know we're arguing over somebody's option that they think they exercised right now. It's always an argument with options. Yeah. Options are never easy.
I'm going to make it clear, guys, and I'm not trying to be the bad guy, but I definitely want them to miss their option.
Okay.
Right?
Yeah.
So whenever they get an option, and I typically don't grant them, it would be the landlord before I own the property gives them an option. That only benefits the tenant.
It's a tenant option to renew. That's all it is.
And so I have no control over the rent, over the timing, nothing. And so if they miss that option, now we get to negotiate the rent, and I have more control. And so, if they have 180 days, they have to give us notice. 90 days, they have to give us notice. I'm not like saying, hey, you're about to lose your option period, because once again, it only benefits them.
Right.
I want them to miss that option period so we can come to the table and negotiate something that works for both of us.
Okay, so typically an option period has to be, they have to agree to it or tell you that they're going to renew like 60 to 90 days or something ahead of time.
Yeah, and
when we used to write them, it was when we used to give them out, like Joel said, we don't give a lot of them out, but it was like you had to exercise it within 6 months, but no more than 7 months before your lease expires, and it was a fair market value option. So it's like you have an option to renew the lease. There was no pre-disclosed rental rate.
I see.
We'll discuss that then. It just gives you the right to stay in the center.
And you always, as a landlord, want to negotiate a period at which they have to exercise their option, because otherwise they have full control to exercise that option, but they also have full control to leave. And if you don't have a time period, they could go up to the day that lease expires and they're like, hey guys, we're out.
Yeah.
And now you're just stuck.
Yeah.
You have no tenant. You haven't marketed the space, and it could be months before you backfill it. So that's the purpose of forcing a tenant that wants an option to have that time period is they got to let you know 3 months, 6 months in advance. So that way everybody knows that they're leaving, and then you can start to market that space for a tenant.
Okay. And I can't tell you how many times I've had a tenant reach out and renegotiate their option. Like, hey, I know I have this option. I need lower rent. You said no. And then they ended up taking their option. Like, you're lucky you have that low rent in your option.
I love it. When they negotiated their option. I didn't negotiate it. And they're like, yeah, we got this option, but we want even lower than that. And I'm like, no, I'm never giving you that.
Okay, so Joel, you said your first contact was a phone call just to get their gut reaction.
Email, phone call.
So let's say, I want to renew. So what's your next step? You make the first offer to say, hey, this is what the renewal is going to be?
Yeah, if I can get an indication that they want to stay in the space, then I don't mind then making the first offer, and I'm going to make something that I think is fair and maybe on the high side of fair. So let's say they're $14 a foot. I think $15, $16 a foot is the going rate. I may hit them at $15.50 with 3% annual increases compounding. Just to keep up with inflation. That may be my initial offer. I'm not trying to, to be unreasonable. I want to be at market. That's what I want to be as a landlord. So I'm never, I have businesses that are doing well, and I know they're doing well, and I know I could gouge them, but I never do that. It's not, I don't want to kill their business or their dream and say, well, you're paying $15, but I know you're making money, so now it's $25. I don't even care what market is. Those landlords, and I know a couple of them, that to me is not in good faith.
Not sustainable.
It's not sustainable either. And I feel like when we lease to tenants, I tell them we'll always be reasonable in our approach. I'm never going to give freebies. I'm not going to negotiate against myself, but I'm not going to be unreasonable. I won't take you so far above market you can't survive. We're going to shoot for a market rent for that space.
How much research are you going to do to come up with that rate? When you say, oh, they were at 13 now, I think 15 is fair.
Okay. How much should you do? I think is a better question.
Yeah.
I mean, that's a good question. I don't know that there's a right answer to that. I mean, in Tulsa, we have a bunch of properties, so we feel like we're pretty in tune.
Tulsa's easy.
Yeah, sure. New retail could be $35 a foot. Could be $40 a foot.
Yeah.
Maybe a little slightly older Class A stuff could be $28 a foot. And then you get into a little bit older than that, B stuff, and maybe just off the main path is 20, 18.
Knowledge is power in these situations. And any negotiating situation, who has the most knowledge about this specific problem has the most leverage, I think, and knowing your submarket, knowing the rental rates for the surrounding centers is super important. Our centers in Broken Arrow, across the street in any direction, the rent is almost double. You can tell the tenants that on the first phone call. Like, hey, the rent is double across the street. You're at 14. Yeah. I'm getting you to 16. The business either works or it doesn't.
It's good to have that in your pocket when you're negotiating.
Yeah, and there's no reason to be a jerk about it either. Like, hey, if you don't realize rent has gone up, you should go see if you can find another space. One doesn't exist, and if you find it, it'll be twice as much as what I'm charging you to just stay here.
And I would say a good exercise to do is most of these tenants that we walk in, they've been flat for 5 years on a lease. And so if you just show them how, hey, you signed up in this center in 2015, now it's 2025, it's 10 years.
Yeah.
You started out at $11 and now you're at 13. Well, you're paying way less than you started because of inflation.
Yeah.
I'm not going to be able to do the math here, but plug in an inflation calculator, $11 a foot in 2015. What does that equate to today? And it's probably $18 or something.
Yeah, it's probably close to double.
Yeah, and so that's a good way to show them, hey, your rent's actually less than when you signed up. So don't give me the story that you can't afford it.
Yeah.
Yeah, and you kind of go back. You said, how do you come up with the original offer? So a lot of knowledge. You're getting real-time data. You're getting feedback from the manager, shooting from the hip, whatever. But at the same time, in a good underwriting exercise, you've gone through a scenario and said, hey, I know this tenant expires. What do I think is going to happen at that renewal? You've budgeted some sort of tenant improvement or leasing commission dollar, and you've gotten at least some sort of shot in the dark on what you think the new rental rate is, so you can forecast your NOI for the 5-year hold period or whatever it is. So we're getting super detailed on that now to where we can pull underwriting packages and I can show you a rent roll of every single tenant, what we thought we were going to take them to. A lot of the times we'll use that as a starting point. hey, here's our underwriting, here's what we need. Market says it supports it, or it doesn't. We may change it on the fly. But yeah, we're referencing the original underwriting too, because we've got a 5-year goal to hit a certain NOI. All of these lease renewals leading up to that is how we get that NOI. Very important.
Okay, what are some other things that you want to get in a new renewal? You mentioned one thing about, let's say they were on a flat rate for 5 years. You want to get 3% at least increases. What about taking them from a gross to paying triple nets or something out? Are there other considerations you might want to try to get in
definitely,
there?
you want to tailor that lease on a renewal with a tenant that wants to be there to what you want it to be. And we always look for yearly, annual compounding increases, because it just doesn't make any sense to keep someone, let's say it's $10 and they have a 5-year lease and you keep it flat. No. Well, now it's harder to bump them from $10 now to 12, 13, 14, because it's like a 20, 30% increase, and it feels it's painful, but only because they stayed flat for so long. Yeah. But if you hit them with annual increases, then after 5, 7 years, that $10 is already at $12, $13.
The bump doesn't have to be that much.
Yeah, and so now you gradually bring them up, and they're able to deal with that a lot better, and you get the benefit of having higher rent each and every year. The other thing is definitely trying to take them to grow, or to a triple nets from a gross. So many landlords agree to these gross type leases where they're not paying their full share of triple nets, like taxes and insurance and common area maintenance. And I don't know why they allow the tenants to strong arm them like that. I would just rather say, hey, these are the costs. You're going to pay the triple nets. Let's set that aside. Now we're going to focus on the rent. We're only going to negotiate the rent. We're not going to negotiate this other stuff.
Correct.
Because it makes our lives easier, accounting-wise, to know that all of that other stuff is taken care of. What is my NOI?
Yeah, it makes the sale easier, right? Because the new buyer's life is easier because the triple nets are the triple nets. The rent is, as close to the NOI as possible. You see sometimes with so many gross leases, the revenue number is huge, and your NOI can be like, half of that sometimes. And it's just like there's so much slippage because you have so many gross leases. And at the end of the day, as a landlord, revenue is revenue, right? So I think landlords tend to just hyper focus on rent instead of focusing on that. And I think the triple nets affect you more on the exit, right? Because when a property is transacted, the property taxes get reassessed. A lot of the times they go up. If you're not recapturing that, you're getting dinged on the sale price from the new buyer 9 times out of 10. 9 times out of 10.
We're getting close to the end here, but let me give you an example of that. Where let's say that you bought a property 20 years ago for $4 million, and now you're going to sell it, and you don't have triple net leases, you have gross leases. And now that property you're going to sell, what did I say, you bought it for $4 million? Yeah. You're going to sell it for $10 million because you've owned it for 20 years. And so now you're going to sell it for $10 million, where the taxes are going to more than double. And so now your taxes are going to go up, let's say $60,000, but the tenants aren't going to cover that.
Correct.
So that comes straight out of the NOI. So then you have to think about that $60,000 as a buyer. Let's see if I can do.
It's worth hundreds of thousands of dollars.
Yeah, so $60,000. Just put that on a 7.5 cap. That's $800,000 in value. I mean, can you believe that? All because you didn't get the taxes built into triple nets. Yeah. And so now that new owner is going to be like, hey, my NOI is dropping by 60 because I'm going to have to pay all these new taxes. $800,000 of purchase price is gone. So these things do matter, and that's why we pay so much attention to them as we're crafting these lease renewals to maximize value for both us and our investors.
Yeah, I would say kind of in closing, the big question we get is, do we do an amendment or do we do a new lease? And I think it really just depends on the lease, how old it is, how tenant favorable, landlord favorable, how many times has it been assigned or renewed. If you're dealing with like a 92 lease and it's been assigned and renewed 12 times, it is a paperwork nightmare to try to find anything in that lease that makes sense. It's a good idea to try to get that on a new form.
And it should be your standard form.
That was my next point. Okay. Yeah, as a landlord, if you're starting to amass a lot of tenants, it's really advantageous to you to get them on a standard form and negotiate from there. It doesn't mean you can't negotiate little points here and there, but it's your standard form. You know what it says. You know how to operate it. Like, you're the one managing those leases.
What's so maddening is when we buy a property that's been managed by some mom and pop, and they just think they're good negotiating. They just negotiate a different lease for each tenant. So this tenant, they have a cap on HVAC charges, and they only pay $1,000, the first $1,000, and the landlord pays the rest. And then this person over here, they have their CAM capped at 3% increases a year. So if the CAM increases more than that, then you don't get to charge them the full CAM. Every single tenant's different, and that is so maddening. Just don't do it. Just tell the tenants, this is it. This is my form. Everybody's on this form, and it's standard. And then once you get all your tenants on that form as the landlord, it makes it easy. When HVAC breaks, when you have increases in CAM, you know exactly how to bill the tenants. You don't have to fight with any of them. They're all on the same lease, and all the same conditions apply. Yeah. And that's how you want to run your business if you're going to be a landlord in multi-tenant retail.
All that to say, I don't think it's an argument, right? Our business works, landlord's business works because they have successful tenants that run successful businesses that are profitable, right? So you're not going in and gouging and overcharging them. It's always a negotiation back and forth, but I find the more data you have, the less kind of blame you take for being the bad guy. Like, hey, market rent is market rent. You want me to be the nice, guy and just discount everything. I'm not a discount shop. We're investing money into the center. It is what it is. Market rent is market rent. I don't feel like that's a me thing. Like, hey, me, Braden, is raising your rent and raking you over the coals. Mm-hmm. I sleep great at night. I don't feel guilty about it. It is what it is. The tenant, I'm sure they're thinking the exact same thing. Like, man, rent's really expensive. Did you realize all of rent? Like, try to find a vacancy in the city of Owasso. Like, there's a retail vacancy doesn't exist in the city of Owasso. Like that puts retail businesses that lease space in that city at a significant disadvantage just because there's nowhere for them to go. Yeah. Right? Like, imagine you're renting a house. There's nowhere for you to move to. The landlord can do whatever they want. So like, they're not taking advantage of that. Just try to come up with the data and make them realize like market rent is market rent. We're not bad people. We're just
Last point. Okay, if you're a tenant listening to this, right, we get it.
Turn it off immediately.
Well, if like you're in Owasso and there's nowhere to go, we can help you. We could do a whole show on how to help tenants negotiate better leases and protect them from future increases. And so you should, if you're a tenant, you should be getting someone to help you, especially someone like us, like a landlord that knows all of the tricks that's benefiting the landlord, and we can help protect you in negotiating with your landlord. Yeah. So if you have any questions about that, if we can help you as a tenant, we will. But anyway, that's the show for today, guys. Lease renewals are a huge part of our business, and it's how we drive value, and hopefully you learned something about that today.
Yeah. Thanks. We'll see you guys soon.